Hello, and thank you for tuning in with me today for this in-depth look at the upcoming Oregon Paid Family and Medical Leave Insurance Program called Paid Leave Oregon. The Partners Group and myself are so excited to bring this content to you today to assist you as you prepare your organization and your workforce for the impacts of Paid Leave Oregon. All right, now before you go any farther, I want you to do me a quick favor and hit pause on this recording. Go and get yourself a bag of M&Ms. Settle yourself back in, hit play, and every time I say the phrase Paid Leave Oregon, I want you to eat one M&M. Not only will this make your time with me more delicious and enjoyable, but it might also serve to condition your mouth to water Pavlov style every time anyone says Paid Leave Oregon in the future. And for some strange reason, the thought of my content causing Oregon employers all over the state to positively salivate for months and years to come brings me so much joy. I promise you I would be doing this right along with you, but I think it's important that I deliver this content to you with a focused mind and an empty mouth. My name is Bryce Rapoon, and I'll be your zany host today, walking you through the finer details of Paid Leave Oregon. I'm an account executive here with our total absence management team at the Partners Group, and I have spent my entire career focused in the statutory leave of absence and disability compliance space. More recently, beginning in 2019, I've become my organization's resident Paid Leave Oregon subject matter expert. I have attended all but one monthly advisory committee stakeholder meeting that the state hosts since those kicked off in late 2019. I've also been present at the majority of public rulemaking hearings, as well as the more informal community conversations sessions that the Oregon Employment Department began hosting weekly earlier this year in 2022. I have also reviewed the text of the regulations and rules so frequently and diligently that I fear they are permanently burned into the insides of my retinas. I have so much knowledge about this program swimming around in my head at any given time that I am just excited for the opportunity to sit with you today and get it all out. Before we get into it, let me start by fully admitting to you now that I am not an attorney, and the Partners Group is not a law firm. Nothing that I say today should be considered legal advice. In addition, I'm telling you what we know as of the date of this recording on October 19th, 2022. I think it's important that you also know that this program is very much still in its formative stages. So things may change before benefits go live in September of 23. Even as of today, there's still a handful of rules on appeals and benefits that aren't final. Pending benefits rules cover additional information on employer posting requirements, job protection, how the department will determine benefits amounts, benefits overpayments, and penalties for employer and employee misrepresentation of facts during the claims process. On top of this, there will be more rules drafted and coming through the rulemaking process in the spring of 2023. Another piece to consider is that the state has only recently started building the system that they'll ultimately use to manage claims and pay benefits. So there's a lot we may yet learn as that system starts to take form. Please continue to follow TPG for updates as the program formation unfolds. We highly encourage you to seek legal counsel on any questions regarding your participation in or integration with Paid Leave Oregon. Here's an overview of what I'll be sharing with you today. I'm going to be introducing the Paid Leave Oregon program to you and then take you on a journey through the specific provisions of this insurance program. Then I'll share a recommended timeline of tasks for you to follow to get your organization ready for when this program goes live for employees in September of 2023. Next, I'll take you through an in-depth look at setting up an equivalent plan, which is an alternative option to participating in the state's plan. Finally, I'll close by taking you through integration with and considerations for your current leave of absence and paid time off programs. All right, let's get into it with an introduction to Paid Leave Oregon. The Paid Leave Oregon law was passed in the summer of 2019, and implementation activities were really underway shortly thereafter with a formal advisory committee, made up of employer and employee interest, formalized and meeting by December of 2019. Like all of us, the state of Oregon and Paid Leave Oregon experienced a lot of disruption and delays during the global pandemic. But we are now firmly set in our effective date of contributions for January 1, 2023, and benefits for September 3rd of 2023. Oregon is one of 13 other states plus Washington, D.C. to enact a paid family and medical leave law. California kicked us off with this trend in 2004, and the most recent state to jump on the bandwagon is Delaware, with their program going live in 2026. In the absence of federal paid leave legislation, we truly have a patchwork of state paid family and medical leave plans spanning sea to shining sea here, and we don't see this trend slowing at all. I could talk all day about the similarities of and differences of state paid family and medical leave programs, which usually starts with how they're funded. But I'm going to get very focused on Oregon's program from here on out. Oregon, like so many states before them, has decided to fund their program through a tax on employee wages that is shared by employees and employers. This tax is going to serve to fund an insurance program with a paid leave benefit available to most Oregon employers who may need to miss work for qualifying family, medical, and safe leave reasons. The employer and employee contributions, or tax on wages, begins with wages paid starting in January of 2023, and then benefits will become available to Oregon employees starting on September 3rd of 2023. Let's go the right way here. I have witnessed a lot of surprise among Oregon employer community about how broad in coverage and employee friendly this program is. And I think that when we look at the guiding principles the Oregon Employment Department follows as they create Paid Leave Oregon, it is plain to see that the broad coverage of this program is intentional in nature. At the end of the day, this program is meant to be easily accessible for all employees in Oregon, and it's meant to provide assistance to families of all sizes and shapes. So now I'm going to take you through the specific provisions of Paid Leave Oregon. We're going to start with who's covered as an employee and who's covered as an employer. I'm going to start on the employer side. Covered employers for Paid Leave Oregon are private employers, state agencies, and local government agencies that have at least one employee in the state of Oregon. This is not an optional program. All of you probably listening in on this are cordially invited to participate in Paid Leave Oregon. There are options about how to participate in Paid Leave Oregon, but for most employers in Oregon, your participation is mandatory. With the exception of anyone who is self-employed or part of a tribal government employers are not covered, but can opt in, and the state is actively working with tribal governments to determine their willingness and appetite to opt into the program. And then federal government employees are also excluded. Employees who are covered by the program have received at least $1,000 in wages from Oregon employment during the qualifying period. And so in this program, we're considering all employment, which means that earned wages from multiple employers in the state of Oregon will cause an employee to qualify for benefits. Let's talk about the qualifying period. For most employees, that's going to be the first 4 out of the last 5 completed calendar quarters. That is where the state will look to establish whether an employee has earned $1,000 in wages. If the employee has not earned $1,000 in Oregon wages over the first 4 of the last 5 completed calendar quarters, then they'll look to an alternate base year, which is the last 4 completed calendar quarters. So if the employee meets the $1,000 threshold under either one of these methods, then they will qualify for benefits. Who is going to pay for Paid Leave Oregon and how much does it cost? So contributions start here January 1st of 2023 in just a few months. The premium rate has been set to 1% of wages with a cap at the Consumer Price Index for all urban consumers West region. So for 2023, when benefits go live, our cap is set at the first $132,900, $132,900 of employee wages, which amounts to a tax of $1,329 per year maximum. Employers are going to pay 40% of this contribution rate, and employees will pay 60%. And then for small employees who have less than 25 total employees nationwide, they do not have to contribute the employer 40% contribution. They still do have to collect the employee contribution, the 60% employee contribution. And if they decide to pay the 40% employer contribution, they're going to be eligible for assistance grants through Paid Leave Oregon that they can apply for when an employee goes on leave. What are the qualifying reasons for leave? So we kind of break these out into 3 different buckets. We've got family leave for caring for a family member who has a serious health condition, or bonding with a new member of the family after birth or placement for foster care or adoption during the first 12 months after that birth or placement. Then we have medical leave if an employee needs to miss work because of their own serious health condition. The third bucket that Oregon has added is called safe leave. So this leave is available to employees who need to seek medical or legal relocation services, anything related to an employee or their minor child or dependents, domestic violence, stalking, harassment, or sexual assault. That's all bucketed into what we call safe leave. I want to go a little bit into how the need for leave is verified, because I know there's a lot of fear out there about just how broad in coverage this law is, how often employees may choose to access the program. But I do want to hopefully put your mind at ease a little bit and let you know that there are verification pieces to this. There are ways in which an employee will need to verify and prove their need for leave. So if an employee is requesting leave to bond with a new child, they'll be required to provide a birth certificate or other documentation that verifies that they're the parent or guardian of that child. For employees need to seek leave for their own serious health condition or because of a family member's serious health condition, they'll have to provide verification from a healthcare provider that gives some details like the date the serious health condition commenced, how long the condition is going to last, and the estimated frequency and duration of intermittent leave, which we will get into in a little bit here. For safe leave, an employee is going to be asked to provide a document that verifies the need for safe leave, which could be something like a police report, a protective order, or other documentation from a healthcare provider or clergy member. There is one exception to the verification process for safe leave, where if an employee is having a hard time obtaining verification for safe leave, they can provide a written attestation of their need for leave under this bucket. Another way in which we're working to verify under Paid Leave Oregon that the need for leave is truly there is that the state is following a serious health condition definition. So when an employee is out because of their own medical condition or a family member's medical condition, it does have to be considered a serious health condition, which is an illness, an injury, an impairment involving inpatient care or continuing treatment. For this purpose, the state is using a definition of serious health condition that is almost exactly the same as OFLA uses, the Oregon Family Leave Act today. It includes conditions related to pregnancy or childbirth and prenatal care. It also expressly includes any period of absence for the donation of a body part, organ, or tissue. So this is where we see it differ from OFLA a little bit in that it expressly covers that organ donation. Now let's talk about the family member definition. So who is covered as far as a family member expands beyond what we're used to seeing in laws like the Oregon Family Leave Act, the Family and Medical Leave Act. We do have additional relationships covered under Paid Leave Oregon. So this will specifically cover parents, and that includes in-laws and step-parents, a child of any age, spouse or domestic partner, the siblings, again, including in-laws and step siblings, grandchildren and grandparents are also covered. And then where we really see broad coverage here is the ability for an employee to take leave for any individual related by blood or affinity whose close association with a covered individual is the equivalent of a family relationship. So this is where I know us as employers have some heartburn, but again, this law is meant to be broad in coverage and cover all kinds of families. So an employee may need to take leave for a person who doesn't meet the traditional definition of a family member, and under paid leave Oregon, that's okay. The state will take an attestation from the employee that the relationship with the person they're caring for rises to what that employee might consider a family member. I want to talk about where we're seeing some limitations and exclusions under paid leave Oregon. So my first bullet is the opposite of a limitation. What they're saying is what we're saying here is that there is no benefits waiting period. This is a little bit unique to Oregon's plan. A lot of other state plans and things like our short-term disability plans come with a built-in benefits waiting period, a period of time that the employee has to be out before benefits start. That is not the case. This is not a limitation in Oregon under paid leave Oregon. Employees are going to be eligible to collect paid leave Oregon income replacement starting day one of their absence. The minimum duration of leave is 1 workday. So like OFLA and like FMLA, the employee will be able to take leave on an intermittent basis, but they do have to miss a full workday in order to qualify for benefits for that day. At the same token, employees with multiple employers have to miss a full workday from all employment to be eligible for any benefits for that day. So they can't miss their day job because of their need for intermittent leave and also work their night job. They have to miss employment from all employers for a full day to qualify for benefits for that day. Employees will not be eligible to collect any paid leave Oregon benefits if they're either on workers' compensation or unemployment. And then employees receiving paid leave Oregon benefits under more than one employer's plan are not going to be eligible to receive more than 100% of their average weekly wage. So that's just a list of some of the limitations of this program. Let's talk about how much time an employee can take. Generally speaking, and there are exceptions to this that we'll get into, but generally speaking, an employee can take up to 12 weeks of paid medical, family, or safe leave benefits during their benefit year. So any combination of those 3 buckets, an employee can have up to 12 weeks total. And for the state of Oregon, the benefits year is going to work really similarly to how it works in unemployment, meaning that the benefit year will start the Sunday prior to the first date of leave used and run 52 weeks forward from that date. All right, so we do have an extra 2 weeks of pay that is going to be available for employee if they need leave for limitations related to pregnancy, childbirth, or related medical condition. And this, again, you're going to hear me say this again here. This is meant to be intentionally broad. So this could include even issues related to lactation. There's not going to be a whole lot of extra verification that happens if an employee claims that they need an additional 2 weeks of leave for a pregnancy related condition, bringing the total then to 14 weeks in those circumstances. All right, I want to talk to you now about a provision of the statute that is, we're still unclear over how this is going to be administered, but what we have in statute says that the combined total of paid leave Oregon with OFLA during a benefits year cannot exceed 16 weeks. So it's essentially saying you get your 12 weeks of paid leave Oregon leave, and then 4 additional weeks of leave under OFLA, which provides job protection and benefits continuation, or 18 weeks in the event that you get that 2 additional weeks for the pregnancy related condition. So this is really an eye crosser. This is going to be very complicated to administer given the fact that we have paid leave Oregon administered by the Oregon Employment Department. They are the decision makers. They are the keepers of the entitlement tracking. And then we have the Oregon Family Leave Act administered by BOLI, rules administered by BOLI, entitlement decisions and tracking owned by the employers of Oregon. And we do not yet have clarity from the state on how they are going to administer this kind of combined provision requirement that is in statute right now. So more to come on this, but no, there's a lot of, I'll say it again, fear out there on the employer side that an employee could take, potentially all 12 weeks of OFLA stacked against all 12 weeks of paid leave Oregon. And this is one provision in there that's attempting to limit that. We just don't quite yet know how the state is going to manage this piece of it. Stay tuned. How much pay does an employee get while they're on leave? So employees who are earning less than or equal to 65% of the state's average weekly wage are going to receive 100% of their income, of their average weekly wage while they're on leave. So this year, 2023's Oregon state average weekly wage is $1,224.82, which means that an income of about $41,000 a year is going to receive a 100% benefit. And then higher paid workers are going to receive less. So anyone earning more than 65% of the state's average weekly wage will get 65% of the state average weekly wage plus 50% of their average weekly wage, that person's average weekly wage that is above 65% of the state's average weekly wage. And the covered individuals or the employee's average weekly wage is calculated by taking the total wages they earned in their qualifying base period divided by the number of weeks in that qualifying base period. So generally divided by 52 weeks. The maximum weekly benefit an employee can receive is 120% of the state average weekly wage, and the minimum is 5% of the state's average weekly wage. And we have broken out what this will look like in 2023. Just remember, the state average weekly wage is updated annually. It's updated in July every year. So we'll see this maximum and minimum benefit change with the update of the state's average weekly wage. We are getting quite a bit of questions around the taxation of benefits and how the tax will work for contributions. Just know, and we have a lot of questions ourselves on how this will work, but the taxability piece of this law, we don't have answers yet. The state is working with internal tax agencies as well as the Internal Revenue Service to try to get some answers to us prior to when this program goes live in 2023. Hopefully more to come there. So I've got an example for you here. Tina is a scheduler who earns an average weekly wage of $1,000 per week or $52,000 a year. So we're going to calculate here how much Tina will receive through Paid Leave Oregon benefits when she needs to go on leave. So Paid Leave Oregon benefit is 65% of the state average weekly wage plus 50% of Tina's average weekly wage above that amount. So we've got 65% of 1,224 state average weekly wage coming out to be $796.13. Then we're going to add on to that 50% of her wage above 65% of the state's average weekly wage, which is going to be $101.94 for a combined total of $888.07. That is going to be her Paid Leave Oregon weekly benefit. And just to give you a sense of how this will pan out to different income levels for employees in the state of Oregon, I do have a chart here that just takes you through for kind of a minimum, medium, and high income employee, what their contribution will look like, as well as their Paid Leave Oregon benefit. So to be eligible for benefits under Paid Leave Oregon, I know I shared with you already that an employee just simply has to have that $1,000 in wages during the qualifying base period. We've got a different eligibility requirement tied to the job protection and benefits continuation component of this law. So It is possible that an employee could be eligible for benefits of this law, but not eligible for the job protection piece, which does not kick in until 90 days of employment with you as their employer. If the employee has worked for you for 90 days, then they're eligible for job protection under this law. And that means they're eligible to return to the same position that they held when their leave began, or an equivalent position with equivalent benefits, pay, so on and so forth. So for small employers who have less than 25 employees nationwide, if the position held by the employees no longer exists, a different position with similar job duties and with the same employment benefits and pay has to be provided. But for large employers, it truly has to be the same or an equivalent position. The benefits continuation has to be maintained as if the employee was continuously employed. So if they pay part of their premium share when they're continuously employed, you can still ask that they do that when they're on leave, but we are required to continue their active coverage in those benefits. And then it's important that an employee who has taken leave doesn't lose any employment benefits, including seniority or pension rights, as a result of taking paid leave Oregon. Let's talk about the notice requirements under paid leave Oregon. So there are notice requirements for both employees and for employers. So let's start with the employee notice requirements. This is, one of the small pieces of control, I guess I'll say, that this law has given to employers. So as employers, we can ask for advance notice when an employee's need for leave is foreseeable. We can ask for 30 days written notice, which details the type of leave, the explanation for the need for leave, and the anticipated timing and duration of leave. And then for unforeseeable leave, we can ask for notice within 24 hours of the leave starting, and we can ask for written notice within 3 days of leave starting. It is important, though, that if we're going to be asking for written notice, or if we're going to be setting notice requirements for our employees, that those be outlined really specifically in our leave policies. So because we can do this, because we can ask for proper notice as employers, the state has given us the ability to put a little bit of teeth into this by saying, hey, if you as employers notify us, the state, that the employee did not give proper notice within 10 days of receiving notice of the employee's need for leave, or within 10 days of receiving notice from the state that the employee has filed a claim, we as the state may choose to decrement their first weekly payment by 25% because they didn't give you proper notice. So that is the recompense for an employee not reporting timely. Employer notice obligations. So the state was kind enough far in advance here to release a model notice poster. So we do have to give notice as employers to our employees at the time that they're hired, and then anytime our policy changes. And the notice must be displayed in the building or work site in an area accessible, just like our other model notices, our BOLI postings, our FMLA poster. Create a spot on your wall right next to those gems and put this there. And then for our remote employees, we need to be able to provide them with the poster at time of hire and anytime the policy changes by either hand, mail, or we can deliver that electronically. And we've got to provide the notice in the language that we customarily use with our employment populations. And here again, I'll just say, if we're requiring written notice from our employees, we just need to make sure that our employee notice requirements are really clearly outlined in our leave policies. So to the left here on the screen, you'll see Paid Leave Oregon's model notice poster. This will meet the posting requirements under the law. You can also have a similar employer-specific poster as long as it meets the requirements under the law. And so employers who might want to consider doing that, especially our employers who choose to offer equivalent plans, which we'll get into in a little bit. But this model notice poster directs an employee to file with the state for their benefits. And so if you're running an equivalent plan, you may want to work to customize your notice poster so that it directs employees to file with whoever is administering your equivalent plan internally or your insurance company. There are reporting and record keeping requirements under this law. So everyone who participates in Paid Leave Oregon, all employers will have to provide quarterly combined payroll reports. So these are reports that will provide the state with what they need for both Paid Leave Oregon and unemployment. Will be provided on a quarterly basis. This will give the state information on employee wages, employee counts for determining who's a small employer versus a large employer. And then it will have you list any contribution amounts owed. In addition, for those who choose to provide an equivalent plan versus going to the state, they will have additional reporting requirements for reporting kind of claim and aggregate financial information to the state. And this is going to become especially important because there are coordination efforts required when an employee is covered by an employer's equivalent plan, but might also be covered under the state plan. So the state will need access for all equivalent plan providers to what employers are getting under that, what employees are getting under that plan. And then if the state does reach out to you with requests for information on what's happening under your equivalent plan, then employers are obligated to respond to that request for additional information for the state within 10 calendar days. There are also requirements for equivalent plan holders for record keeping. So any employer offering an equivalent plan must keep copies of all required reports and records related to their equivalent plan for at least 6 years and provide those records to the state upon their request. I want to talk a little bit about the weirdness that's created with the fact that we have a lot of employees who might live in Washington and work in Oregon or vice versa. So we have some rules that were recently passed on place of performance and localization. And I will say that Oregon and Washington did a great job coordinating on this issue and working together to form clearer rules on which state's program resides. So we kind of take a litmus test here in descending order to determine whether Oregon's plan will prevail or Washington's plan will prevail. And this isn't just for Oregon and Washington. This will help you determine what plan to run for an employee that might live and work in a different state anywhere. So first thing we're going to ask is, if all the work is being performed by our employee in one state, this is the easy one. Where they work is whose program presides. In that event, all wages are reportable to that state's paid leave program. That's where place of performance really makes sense. They may live in Washington, but they commute to Oregon every day to do their job, which means the Oregon program will prevail. If work is performed in both states, what we need to ask then is the work in one state incidental, which means intermittent, irregular, temporary, transitory, or isolated in nature? And if so, then we're going to pick the state where work is not incidental, and that state's program is going to preside. If that doesn't meet it, then we move to asking, if the work is performed in both states regularly, where's the employer's base of operation? And then we're going to assign wages to the state where the employer has their base of operation. If work is performed in both states regularly and there is no base of operation, which state does direction and control come from? So you're seeing how we're kind of getting more broad, but we still have guidance on which state will apply. So in this event, it's wherever the employee's direction and control comes from is the state that will provide. And finally, if work is performed in both states regularly and the direction or control doesn't come from either one of the states in question, which state does the employee reside in? So this is a really helpful guide. I'll say that there is a very lengthy rule on this piece in the Paid Leave Oregon rules there are a lot, I think there's like 15 different examples of real life examples of which state would win out. I find the rules still, the language of the rule, to be pretty confusing. So what I typically defer to is a letter that the state of Washington and Oregon put out, a joint letter on this topic with additional examples that to me are just a little bit more clear. But I've got a copy of that letter linked in the resources that are at the bottom of the slide deck. All right, so those are the basics of the program. And now that you can consider yourself an expert on the basic components of Paid Leave Oregon, I want to set the stage for you by offering you as an employee a timeline into what you should be doing now and onward to prepare your organization for the impact of this program. So I know that the thought of getting ready for Paid Leave Oregon with less than a year's time may seem daunting, but I think that having a timeline as a guide for tackling this preparation work in smaller bites can really help turn this into an achievable task for you. At least that is my hope for you. All right, so here we go. I'm going to start at the left and move rightward. So we're already taking you on some of your first steps toward readiness today. So first step, by the end of October here, I want you to be well-versed and comfortable with the basics of Paid Leave Oregon. From there, and also what I'll help you with today, I want you to review the equivalent plan application declaration of intent process. I want you to understand your options for equivalent plans and be well on your way by the end of October to making a decision about whether an equivalent plan is right for your organization. And hopefully, after sitting with me today and eating a whole bunch of M&Ms, you'll be ready for that. Another thing that you'll need to do here, a more tactical piece, is visiting Francis Online, which is the website that the state of Oregon has launched for you as employers to submit your combined reporting for Paid Leave Oregon and unemployment, and to submit your equivalent plan applications. So Francis Online is up and running. It went live on September 6th. The go live for that website was really smooth. I have to give the state of Oregon credit for that. They did a great job, creating this website. It was a big lift for them as part of their unemployment modernization efforts. And they were really ready for that September 6th go live date. So it is ready for you to go online. All employers will have to create an account on Francis, because that is where we'll go to submit unemployment and Paid Leave Oregon combined reports. All right, so after you've done that, the next big deadline is November 30th. So looking to the bottom here, November 30th, that is the last day that we as employers have to submit a declaration of intent or an equivalent plan application. And we'll get into this when we get into the equivalent plan section. This is basically the last chance that you have to tell the state, I intend to offer an equivalent plan in September in order for your organization to be exempt from paying taxes to the state of Oregon starting January 1st. So November 30th is the big looming deadline. Again, that is when we as employers need to tell the state of Oregon if we intend to offer an equivalent plan. Otherwise, they're assuming your participation in the state plan, and they'll expect contributions from you and your employees starting January 1st. By December 1st, we should be kind of finalizing our decisions as employers around how much contributions to take from employees. So we know that the law requires that we take no more than 60% of the contribution from employees, that contribution rate being set at 1% for 2023. But we could, as employers, decide to fund part of the employer 60% contribution rate as an employee benefit. And so that decision, I want you to be thinking about that and have that decision made by early December so that you can work that into your payroll system. And then I would also recommend that, because this is a new tax for employees, that you put some communication materials out on what's coming, that you communicate this new tax to employees, and that can be coupled with some basics about the benefits under Paid Leave Oregon, so they understand what this new tax is going to get them in return so that they understand the basics of the program. But just know that once you do that and word is out, you'll begin to get questions from your employees on Paid Leave Oregon. So I would say at this point, since again, we're still in the formation stages, communicate at a high level the basic provisions under this program to employees as you're also communicating about that tax. And then by December 31st, we need to just ensure that our payroll systems are ready for that contribution deductions, starting with any wages earned in January of 2023. By January 1st, we need to be sure that we're collecting the contribution. Again, 1% of wages, with the employees funding 60% of that and the employees funding 40% of that. Everyone will get taxed to a maximum in 2023 of $132,900. That is that CPI cap. We also are required to post our model notice. That's that poster that I showed you, or something similar that communicates all of the same pieces of required information. That has to be posted by January 1st and delivered to employees that are remote by January 1st of 2023. Another thing that we want to have you start doing, if you haven't already done so by early next year, is really starting to assess the impact of Paid Leave Oregon to your current policies and process, and start thinking through the change management piece. How do we need to adjust our current leave of absence, potentially short-term disability, paid time off programs to ensure that we can integrate as easily as possible with this new Paid Leave Oregon program coming online. It's in September. We can start working on best practice Paid Leave Oregon policy to include in our handbooks, along with our other leave policies, any references that we need to make to Paid Leave Oregon in our other leave of absence policies. Let's start that work in January so that you are, well on your way to finalizing any kind of plan or policy or process changes well in advance of the September go live date. For those employers who don't decide to attest to their intent to offer an equivalent plan in time to forego contributions in January, you can still apply for an equivalent plan next year. It just means that for a time you will be paying contributions to the state first, and then you'll be able to set up your own trust. So February 28th is the last day for you to submit an equivalent plan application to be exempt from paying and remitting contributions starting in Q2 of 2023. The next big event is talking about the end of April here. So that is when your Q1 combined payroll reports for unemployment and Paid Leave Oregon will be due. And that is when your Q1 contributions will be due to the state. This is also when we want to really make sure that we're executing on our Paid Leave Oregon communication strategy, getting the word out to our organization. So for that, I recommend that you start at your top level, start with your executive leadership, cascade that communication down through the organization. But I'd say end of April is when you want to make sure that you have gotten underway in communicating the finer details of this plan to your organization and starting to work through your change management plans. May 31st is the last day to submit an equivalent plan application for those who have submitted the declaration of intent. We are going to get more into the differences of a plan application versus a declaration of intent in the next session. But this is the last day to submit an equivalent plan application to be exempt also for paying and remitting contributions beginning in Q3 of 2023. So you see how the state kind of has these deadlines throughout the year to say, hey, if you want to forego paying the tax to the state at these milestones, we got to bump up against when you have to submit that plan application by. So that's all laid out for you here. July 31st of 2023 is when our Q2 payroll reports and contributions are going to be due. And this is really when you should have all of your policy and process changes finalized prior to September 3rd of 2023. I think I've been saying 22 a lot, but everything from January 1st and beyond is for 2023. So I apologize for that. September 3rd of 2023 is when our benefits go live. So I hope that this is a helpful takeaway for you as you begin making your preparations. All right, so let's get into the weeds here on equivalent plans. So what is an equivalent plan? An equivalent plan is an alternative to entering into the state's plan. If you run an equivalent plan, it means that you're providing benefits to an employee that are equal to or greater than those provided by the state plan. In order to be approved for an equivalent plan, employers have to submit an equivalent plan application and get approval from the Paid Leave Oregon administration. Once an approved plan is effective, the employer is not required to collect and pay contributions to the state, but they can still collect contributions to fund their own equivalent plan. And if you're running an equivalent plan, that means that your employees are applying for benefits through your equivalent plan versus going to the state to apply for benefits. There's two types of allowable equivalent plans in the state of Oregon. An employer administered plan, which would kind of more traditionally be referred to as a self-insured plan, where you as the employer are funding the benefit, or a fully insured equivalent plan where you are paying a premium for an insurance company to manage that program for you. So let's go through the requirements for you to be able to offer an equivalent plan. Your plan has to cover all employees, including part-time, seasonal, and temporary employees, just like the state plan will. So employees who are previously covered under the state plan or who are new to the Oregon workforce have to be covered at 30 days of employment. But employees who were previously covered under a different employer's equivalent plan have to be covered on their date of hire. So this is kind of a wonky, could be a little bit difficult to administer piece of the equivalent plan requirements, where you can say, hey, generally we're going to cover employees once they've been with us for 30 days. But as you can see here, if you've got a new employee that previously came from an employer who was running an equivalent plan, you have to cover them date of hire. So if you plan to manage kind of the general 30-day coverage, then you've got to have a mechanism for determining whether an employee came to you from an employer that ran an equivalent plan. And in that case, you'd have to give them coverage under your plan as of their date of hire. For contributions, you can certainly collect contributions from employees to help fund your plan, just like the state is doing to fund their plan. But what you can't do is you can't collect any more contributions under your equivalent plan than what the state would have collected under their plan. So in 2023, this means that employers cannot withhold more than 60% of the 1% contribution rate that was set for 2023. So what we are seeing is we're seeing a lot of insurance carriers who are entering the market and offering to provide fully insured Paid Leave Oregon and equivalent plans. But in a lot of cases, the premium rate that they're charging is, when an employer's projected incidence calls for it, might be more than 1%. And in those cases, just know that if you're planning on collecting contributions or premiums from your employees, you cannot collect more than 60% of the state's contribution rate. And then these contributions collected from employees have to be used for expenses related to your equivalent plan only. And there are a lot of requirements when it comes to the benefits you provide under your equivalent plan. So the benefits that you provide must be equal to or greater than those provided under the state plan. You are required to issue the first benefit payment within 2 weeks of the claim application or the leave start date, whichever is later. Benefits must be paid weekly, if fully insured, or if it's a self-insured plan, you've got to pay those on your normal pay schedule. And so when we talk about providing equal to or greater benefits, that means a lot. That means you have to cover the same leave reasons under your plan. You have to cover the same definition of family member under your plan, which might mean covering somebody with a relationship that feels like a family member. Related by birth or affinity has to carry through to your equivalent plan. Your payments have to be at least as generous as the payments offered under the state plan. So I'm getting a lot of questions, employers coming to us and saying, hey, I have this really generous paid parental leave program. Can I submit that as my equivalent plan? Or I already offer short-term disability. Can I submit that as an equivalent plan? And the reality is, because the plan has to look almost identical to the state plan, unless it's more rich, there isn't a plan out there that I've seen an employer operate on their own that will meet the requirements of the equivalent plan requirements under Paid Leave Oregon. You really would have to create that program and ensure that all of the same leave reasons are covered, all of the provisions of the benefits are covered under your equivalent plan in order for you to get an approval from the state to offer that equivalent plan. And I would say if you're looking at providing an equivalent plan, one thing that I encourage you to research are the rules for simultaneous coverage, which are going to be a little bit of a bear to administer. So an employee is simultaneously covered if they have coverage by more than one plan at the start of their leave. So this will come into play, for example, if an employee has more than one employer. And this simultaneous coverage has to be factored in. So employers are going to need to contact the state in these situations to get information on the employee's average weekly wage. The state will have to help you calculate the prorated benefit amount. You'll need information on if the employee might have started their benefit year or used any leave under their other plan. So there is coordination that is going to be required if you've got this if an employee has a simultaneous coverage issue, and that's just another administrative piece that you'll have to factor in if you plan to offer an equivalent plan. And then your plan has to have an appeals process. Again, just like the state plan does, there's a formal appeals process. Those are part of the rules that are still pending that we're waiting on, but there is a very formal process that employees will follow if their benefits are denied or if they feel that their benefits were calculated incorrectly. That has to carry through to your equivalent plan as well. So let's get into now, what is this that I keep referencing, this declaration of intent versus just submitting a private plan application. So you this year alone kind of have two options for how to tell the state that you want to offer an equivalent plan. Option one is just filing an equivalent plan application, which is not what most of us are ready for quite yet, but it is an option that's live and out there. So this is a one-step process. This works best for you if you're maybe self-administering your own plan. You've got a really good plan document outlined. That it's equivalent or greater than the state plan in all aspects, and you're ready for that by November 30th. So if you're in this camp, which again, most of us aren't quite here yet, but you can file your equivalent plan application by the end of November to avoid paying any premiums to the state starting 1/1/23. And then I've got these kind of other deadlines too. If you're not quite ready now, but you decide early next year that yes, this is something I want to do, then as long as you submit your private plan application by February 28th, you're only going to pay into the state's trust for the first quarter as long as your plan is approved, but you could stop paying to the state's trust starting 4/1. And then your kind of final deadline, everyone's final deadline really is by May 31st. Those plan applications have to be in because anyone who does not have an equivalent plan in place by the end of June, by June 30th, will be going into the state's plan in September. So here's option two, declaration of intent. This is meant for employers who are not quite ready to follow the application process. Most of us are there. And in fact, any of us who are looking for a fully insured plan option are there by default because the state of Oregon has not gotten through their process that they need to follow to approve insurance carriers' equivalent plans. So for those insurance carriers, they don't have approval yet from the state. They're getting guidance from the state on what their plan documents need to look like still. And once they have that, they'll formulate their policies that we will, as employers, take and submit to the state to get approval for our equivalent plans, but we're certainly not there yet. I don't anticipate we'll be there until maybe the end of this year, maybe early next year. The final deadline in this case to submit an actual plan application with our insurance carrier's policy is May 31st. So we still have some time. But again, this is our way of being able to tell the state, I would like to offer an equivalent plan starting September 3rd, but I'm not ready to file my application yet. And so step one is filing the declaration of intent by November 30th. This can happen on Francis Online. It's a pretty easy process. It's basically you attesting that, yes, I intend to offer an equivalent plan, and the state is asking you to say, hey, at this point, are you planning on offering self-insured or fully insured, just to help them with their own planning. And then step two will be to actually file your equivalent plan application by May 31st. And that's a little bit more rigorous. That's where you're going to be required to provide your actual plan document so the state can verify, yes, this meets the requirements of an equivalent plan. We also have guidance from the state that says, if you follow this process, this declaration of intent, you should hold employee premiums in trust starting 1/1/23, just in case your equivalent plan is not approved, or you choose, maybe in February you choose to go back to the state. Maybe you say, no, I don't think this is the right fit for us. After all, we would like to enter into the state plan. Holding those premiums in trust from employees ensures that when you go back into the state's plan, that you've got what you need to start paying contributions. Because if your equivalent plan isn't approved, you will have to pay contributions going back to 1/1/23. And if you haven't been collecting premiums from employees, we cannot retroactively deduct those contributions from employees. All right, so I've got hopefully a little bit of a less dramatic timeline for you here with tasks associated just to the Paid Leave Oregon equivalent plan milestones. So again, by the end of October here, we want to make sure that you visit Francis Online, create your account. Anybody can do that. That is up and running. By November 30th, we want to make sure that you're logged in there. That is the last day to submit an equivalent plan application or a declaration of intent, to be sure that you do not have to pay premiums to the state beginning 1/1/23. By the end of December, we need to make sure that your payroll system is ready to collect contributions, to collect those contributions that you are going to hold in trust, which has to happen until your equivalent plan is approved. So you're going to hold those contributions in trust until your equivalent plan is approved. Then you've got options. You can either, once your plan is approved, you can return those contributions back to employees, or you can use those contributions towards your equivalent plan expenses, so towards benefits or your administrative expenses. Starting January 1 is when you start withholding those contributions, either to use towards your equivalent plan or just in trust until your equivalent plan is approved if you plan on refunding them to employees. Again, if you decide later on to offer an equivalent plan, February 28th is the last day, is the last chance for you to apply in order to be removed from paying contributions beginning Q2. May 31st is the last day to submit your application for those who submitted that declaration of intent. So again, two-step process there. You submit your declaration of intent by November 30th. You then have to submit your actual plan application by May 31st. And then as of June 30th, if your equivalent plan has not yet been approved, then you're paying contributions to the state dating all the way back to 1/1/23, including penalties and interest for missing those quarterly deadlines. September 3rd, again, is where the benefits go live. So let's talk a little bit more about what the equivalent plan application looks like. That's going to happen through Francis Online. There's also a way to mail in both your declaration of intent and your equivalent plan application if you would prefer. An application has to be submitted for each
business based on business identification number. A complete application is going to include information about you, about the employer applying for the equivalent plan, the policy documents that will be used to govern the equivalent plan, or the insurance policy in the case of a fully insured plan. Proof of solvency is going to be required only if you're offering a self-insured plan, and there is a proof of solvency guide on the state's website for those of you who fall into this category. There's also going to be a questionnaire that you'll have to go through, and that's just additional information that the state is getting to determine that your plan qualifies as an equivalent plan. For those of us offering fully insured plans, they're going to look for information about our insurance carrier, and then each equivalent plan application has to be accompanied by a $250 application fee. So the Oregon Employment Department is going to be reviewing those and has set a goal of responding to each equivalent plan application within 30 days from the date that you submit it. If your plan is not approved, you can appeal to the Oregon Employment Department or the Office of Administrative Hearings. So in addition to the first time we have to submit for approval, there are reapproval submission requirements. So we have to apply for reapproval under the following conditions. So every year for the first 3 years of your equivalent plan, you have to file for reapproval, and that filing has to be joined by a $150 application fee. And then we have to file again anytime the plan undergoes substantive changes with a new $250 application fee. So the state considers things like changing between fully insured and self-insured, changing fully insured policies, changes to any of the answers on the application questionnaire, amendments to a self-insured policy. All of those changes are considered substantive changes, which would require kind of like a new plan application with that initial $250 application fee. And then if you've got those substantive changes, your 3-year reapproval window starts over, where you have to apply again annually for 3 years with the $150 application fee. So if you decide that you want to leave your equivalent plan and go back into the state's plan, you can do that once your equivalent plan has been in place for 1 year. You've got to give the state 30 days notice. You've got to give 30 days notice to your employees. And then under your equivalent plan, you'll need to run out any open claims for those who are accessing the benefit at the time you give that notice. You've got to pay the balance of any employee contributions to the state trust that you have left over in your trust, minus any funds that you need to pay benefits and administrative expenses. So that's kind of your cost of getting back into the state's plan. Once you withdraw, is any balances left in your trust minus benefits and administrative expenses go to the state trust. The effective date of termination is 30 days from the later of the date that they receive your withdrawal form, the first year anniversary date of the equivalent plan, or the date that you may request. You may have a specific date in mind. So it's going to be the later of those 3 dates. The Oregon Employment Department can also choose to terminate an equivalent plan for a few reasons, including if they determine that you're misusing employee contributions for insolvency, or if they determine that you're failing to follow the program requirements of an equivalent plan. All of those are reasons in which the state could cancel your equivalent. What the heck are we going to do with our current programs? So I want to talk to you first about your current pay programs. There are some rules around the coordination of Paid Leave Oregon with your existing paid time programs. So as an employer, you can permit your employees to use paid sick time, vacation pay, or any other paid leave earned in addition to receiving Paid Leave Oregon benefits to essentially top them up to get them up to 100% of their average weekly wage. You can't force an employee to supplement Paid Leave Oregon benefits with their PTO, and you can't require that they exhaust their PTO or other employer-specific benefits before applying for the state benefit, but you can certainly allow the two to coordinate. In addition, some employers may choose not to allow supplementation. They could say, oh my gosh, I don't want the administrative burden of trying to figure out what the state is paying, and then having to figure out how much of this benefit is a top up. That is certainly permissible, but you want to be really careful about kind of mandated paid sick programs. Oregon sick leave is not going away. It's still going to be there along with FMLA and Oregon Family Leave Act. But we want to be really careful when we about requiring the use of Oregon sick leave and denying the use of Oregon sick leave. So I think the exception would be there. I think it's perfectly permissible to say, in general, we don't allow supplementation with our paid leave programs, but just know that Oregon sick leave should be an outlier for you there, and employees should be able to access that if they choose to. And then you're going to want to make sure that employees don't receive a combined benefit of more than 100% of their average weekly wage if you do allow supplementation. So this is per statute. For paid leave Oregon statute, an employee is not allowed to receive more than 100% of their average weekly wage through a combined total of paid leave Oregon benefits and your benefits. And I can tell you from interactions with the state of Oregon, they are going to rely on us as employers to police this provision. The state of Oregon is going to pay their benefits. They're considering themselves the first payer. They are not asking if an employee is receiving benefits, other benefits from their employers. They're relying on us as employers to ensure that employers don't receive more than 100% of their average weekly wage through a combined total of all of the programs that we're going to be offering. So let's talk briefly here about considerations for your current paid leave programs. So, we all know that paid leave Oregon is coming. You've seen that it's going to be providing a generous benefit, especially to lower income earners. So you may want to consider changes to your current paid leave programs because of the cost of paid leave Oregon to you, or to try to drive behaviors, maybe to try to limit the amount of leave that might be used through a combination of all of these programs. So we can consider things like changing eligibility requirements, accruals, rollovers, the amount of benefit available to employees, or who's eligible for a benefit, because we know that this really generous benefit from the state is coming on board. And another thing that we want to start thinking about is updating policies to address coordination with paid leave Oregon. Are we allowing supplementation? If so, let's get that into our policies and define how that's going to work. Or are we not allowing supplementation generally, aside from Oregon sick leave? Let's get that into our policies to make that really clear. And then do we want to update our policies to try to drive behavior? So this could be a really good example of if you are worried about the leave stacking, if you want to ensure that you're driving employees to apply for all of the benefits that are available. I can tell you that we can't require employees to apply for paid leave Oregon, but what we can do is adjust our current programs. Like, for example, if you offer paid parental leave, you could put a provision into your paid parental leave that says, hey, our paid parental leave is going to adjust and offset for any benefit that you're eligible to receive from a state paid family and medical leave program. Not that you are receiving. I'm not interested in you proving that you've applied or not. We're just going to automatically offset for any benefit that you're eligible to receive. So therefore, you're not requiring the employee to apply, but you're still saying, hey, we're going to reduce our benefit by this amount to encourage you to participate in all of the benefits that you have access to. So those are some of the things we want to start thinking about working into our current pay programs. Talking a little bit about integration with short-term disability. So for most short-term disability plans, especially the fully insured ones, the short-term disability is going to view the state as the first payer, and they're going to be taking a similar approach to what I just recommended to you in your own programs, where they will assume that the employee has applied for paid leave Oregon, and they will offset their benefit by the amount that they're estimating the employee is going to receive from paid leave Oregon. There's a lot of questions that we get around, should I dramatically alter my short-term disability plan? Should I not even offer short-term disability plan anymore because this benefit is coming online? I'm of the opinion that short-term disability still provides important income protection. I'm not recommending that we do away with short-term disability. There are maximums as part of paid leave Oregon. You're only going to be eligible to receive up to 120% of the state's average weekly wage. So this is going to create a gap in income potentially for our higher income earners if you do away with your short-term disability program. Another area where we're going to see a gap potentially is where an employee might use 12 weeks of paid leave Oregon benefits to care for an ill family member or to bond with a child, and then they may experience a medical emergency of their own and have no income protection in the absence of short-term disability. And so we have to think through some of these things as employers and take that philosophical look, and is that what we want for our employee population? Another area where you might see a gap in the absence of short-term disability is that paid leave Oregon is going to pay most of us for a maximum duration of 12 weeks. And so for, we may be taking away a bridge between 12 weeks and when long-term disability kicks in if we have an absence of short-term disability. So again, in most situations, I'd say I would probably not recommend doing away with short-term disability altogether, but you do want to make sure that you're set up for that program to integrate and offset the amount that an employee might receive from paid leave Oregon. The last thing I want to cover with you here is the complexity that we now have, because things like Oregon sick leave, OFLA, and FMLA are not going away. OFLA is still alive and well. Unlike what we saw in Washington, this unpaid leave protection, this law is not going away when paid leave Oregon comes online. So we have to deal with the interplay between paid leave Oregon, the Oregon Family Leave Act, and the Federal Family and Medical Leave Act. So if an employee is eligible for OFLA and FMLA, in addition to paid leave Oregon, the law states that the laws do generally run concurrently. So that's a win. I know we all again say that there's concerns out there about leave stacking. The law does tell us that where we can, we should be running the laws concurrently. But unfortunately, there are a lot of situations where by definition, leave under OFLA or paid leave Oregon or FMLA will not run concurrently. So I've got a few definitions of where we'll see that here. So we've got the eligible family member definitions between FMLA and OFLA and paid leave Oregon are all different. So if you've got somebody who's requesting leave under paid leave Oregon to care for their roommate, because that's that feels like a family member to them, that leave will not be covered under either OFLA or FMLA. The eligibility requirements differ under each of these three laws. So you'll see an employee come into eligibility for paid leave Oregon first before they would become eligible for OFLA or FMLA. The leave reasons are a little bit different. For example, you've got safe leave covered under paid leave Oregon. Leave for that reason isn't covered under either OFLA or FMLA. So we can't run the laws concurrently in that case. And then the leave entitlement measurement periods will likely differ. So the benefit year for paid leave Oregon is, again, that 52 weeks starting the Sunday prior to the first day they use leave. Most of us use a rolling 12 months measurement period for FMLA and OFLA. So we want to be kind of aware of that and where we can run those leaves concurrently and where we can't. I've got a more detailed kind of comparison here of just how different these laws are and where we see different eligibility requirements, different amounts of leave. The intermittent use of intermittent leave is different under each law, and then the reasons for leave, so that you can just really clearly see that yes, we should be running these leaves concurrently where we can, but there are going to be a lot of situations where we can't, and we don't want to be doing that. All right, so I truly hope this has been helpful for you. I want to leave you with some additional resources, some helpful guides for you as you kind of begin your journey of readying your organization for paid leave Oregon. I'm starting with some state resources. So I will tell you the paidleave.oregon.gov website that Oregon has set up for all things paid leave Oregon is really good. There's all of the resources that I have for you linked here are from that website. It's pretty user friendly. It's a great site. Go to it, learn. And they're continuing to provide additional resources. They're updating their FAQs all the time. So it's a great place to go. In addition, paidleave@oregon.gov is an email address that I use frequently. I have sent a lot of questions to the state of Oregon directly through this email address. They are great about getting back to me timely. I think they'll experience a surge in questions as this program gets closer, but I can tell you that I don't think I've ever waited more than 24 hours for a response from the state of Oregon when I've sent a question. They also have their phone lines staffed already to take questions from the public. So they welcome any questions from employers, from employees. Their phone number is here. We talked a lot about getting your account set up through Francis Online. There's an informational website on Francis Online that I've linked you to here, as well as the actual Francis Online website. In addition, the state of Oregon has put together some guides. So we've got a really nice comprehensive employer guide already out there. And then we've got a guide and a checklist specifically on equivalent plans. There's more information I've linked you to here on the payroll reporting component. And also that letter that I talked about, that joint Washington-Oregon letter on place of performance, this border issue that we run up against. And then I've also linked you to the partners group, Paid Leave Oregon website, where we've got some helpful resources. We're currently working on things like our own equivalent plan checklist and some other resources to help guide you. So thank you so much for your time today. I hope that you have found this valuable as you start to really think about how Paid Leave Oregon impacts your organization. And you'll all have to email me and let me know if you were able to get through your full bag of M&Ms today. Thank you so much.